Hi there, I'm Ross Woodfield. Welcome to Black Hawk Global's daily market update. Starting off with the gold market now, and it saw a sharp sell-off thanks to US dollar strength. Federal Reserve Chairwoman Janet Yellen's comments at the end of last week added more bearish pressure to gold as she signalled rate hikes may be on track. Gold dropped over 1% in trading this week as Yellen said an increase in interest rates may be warranted later this year if the economy continues to improve. Looking now at the US dollar, and it lifted on the charts thanks to some better than expected economic data. Pending home sales were up by 3.1% from a month ago versus market expectations of just 0.4%. The dollar was also buoyed by personal income figures which ticked higher by 0.4% from a month ago. And the dollar could find more support later tonight if consumer confidence figures continue their strengthening trend. Moving across to the yen, and it depreciated sharply by over 100 pips against the US dollar. The yen was weakened thanks to industrial production figures which fell by negative 3.4% month on month versus negative 1.8% expected. The market also took a risk-on approach as it sought the US dollar and looked to sell off safe haven assets which had been in demand recently with the situation in Yemen. And keep an eye on Japanese cash earnings figures due out tomorrow, as they could weaken the yen further if they are disappointing. And finally today, the Aussie dollar has continued to drift lower thanks to some dovish comments by China's central bank. The PBOC suggested that it had room to act on sluggish growth, indicating to the market that further stimulus may be forthcoming. The Aussie has also had a tough time recently as China's economy looks to cool off. Iron ore prices have been driven down by the lack of demand for steel in China, which has hurt the Australian economy given the importance of the export sector. That's all we have time for today. For Black Hawk Global, I'm Ross Woodfield. Thanks for watching.